Come, let us prepare. Make some good profits this week. Market lifted some clues right here. There's very heavy liquidity, yeah, as well as this very important level here. Let's talk about that. There is a very important indicator as well. This will decide if we continue to stay up. So I will talk a little bit more about this later in this video. But more importantly is understanding how we manage to squeeze. A very big part is understanding this liquidity here for this week. So do a very simple review that you understand how from here you're able to tell this particular squeeze later in the week as well. So a big part of that is watching what we talked about on Wednesday here. Now this is very important. You have to learn to understand this. It's not the first time we talked about this, isn't it? So how we were soaking up sellers pre-market. So this is 29th of April at 1 p.m. This was 1 p.m. right here. You can track back to the video then. It's important you understand this, where I talked about how this was soaking up the sellers for the big squeeze that will happen. Right, so it's not the first time you've seen this. So if you've been watching my videos, this will be very familiar to you. And this was the premise of the squeeze that thereafter happened. You see, for the next 2 days, we started squeezing. Now, will we start selling? This is important because I want you to understand what this really means and how to be preparing accordingly from here. And as we take a look now at the trend indicators, I will also be quickly running through some of the very important levels right there. So it's important you watch the previous video from this. The links are in the description, and more importantly, track back to the video before that and the video before that, so you can understand and chain up my thought process so you can be able to understand how we got here so far. I was talking about how the market created one market cycle, right, from the retest of the upper Bollinger's to the retest of the bottom Bollinger's and back up again to the upper Bollinger. So there has been many inflection points throughout this, and I term this as one market cycle. So this is the perfect opportunity for you to learn, because the market was kind that within 1 to 2 months we managed to get a full market cycle that you can learn from and be able to understand how to be preparing for this next time. So one way to do this is to watch my videos every single day. You can track back how we prepared each day after day and how to be understanding where we got here so far. So I post videos every day. It helps you in your understanding. That's your best way to learn, because the market gives you the opportunity to learn by giving you several scenarios in one beautiful market cycle. This is your opportunity to learn. Usually this happens literally years. It takes to happen, but we have it in 2 months. Take a time and opportunity to learn this. And so likewise for Discord members, end of day summary here. So this is what you need to be doing, reviewing every day's end of day summary together with the video reviews that I've given you. So it's the best way to learn. And one of the more important points that I talked about is how you see the 200-day moving average. I'm sorry, I meant the 20-day moving average closing in to that 700 level that I was talking about. And I told you, wait for the bottom Bollinger to start trending up again, right? Breaking out from the previous lows right here. You see it dipped previously, right? I said when it was dipping here, it will continue trending up. And you see it happen. And now that we are back here, now we may want to be anticipating a pullback here, but you do not jump the gun, because I also mentioned how the 5-day can be trending up together with the upper Bollinger, and you see it bouncing off the 5-day and upper Bollinger, giving us the beautiful moves right here, at least 40-point move because of the 5-day bouncing up with the upper Bollinger right there. Now, it's important you have to see 5 days starting to plateau. You have to see the upper Bollinger starting to trend down as well, right? And you see the 20-day coming closer to that level, and the bottom Bollinger is already trending up. So this is a good sign if there is going to be a pullback. And I mentioned that the 20-day will almost certainly be retested once every month, right? If you take a look at every uptrend, and I've shown you this many times, this is the 20-day moving average, and you see in every uptrend, we will always have a retest of the 20-day. Sometimes we're lucky, we get a retest of the bottom Bollinger right here as well, right? But you see the 20-day will always be retested. So that's the most beautiful thing about that. You can't be waiting out for that, and eventually it will happen. But before that happens, well, it's obvious to see the 5-day turn into some sort of resistance. And you see the liquidity already building up near where the 5-day is and where the 5-day is plateauing. So this is where you have to be paying close attention to. So where do we go from here? You take a look now at the 30-minute chart, and you see now the 5-day is coming close to where the liquidity is. You see that happening, isn't it? So this is what you want to see. You want to see the 5-day starting to plateau, maybe to trend down slightly. You want to see the 20-day coming to a very key liquidity level, as I mentioned, that 700 level, right? And you want to see the blue algorithm. Remember the blue algorithm? Yes, this is where the market has been building liquidity. This is where, if the bears want to be retesting, they want it to be building liquidity on the way down there. So now you see that the magenta is already starting to rebuild some liquidity here. Starting to show some selling at the magenta, isn't it? But you just have to be careful for now, because remember I talked about this orange. You remember this orange? See for yourself how this orange bounced back up. It's still a buying continuation structure. You cannot be complacent. It's still a buying continuation structure. So pay close attention to that if it wants to buy up, and you see the squeeze happening in that green for 2 days. It was very enjoyable because you can very safely allow your calls or your long positions to just run because it's in the strongest identified algorithm right there. So firstly, before this break, you have to first wait for the orange to break. So if the market is kind, we break it early, right? So you pay close attention to that. Otherwise, I will be more mindful if this wants to head down, that the market must first enter into this blue liquidity zone here where the 5-day moving average will reside, right? You want to see who's selling, whether it's the magenta, and obviously you want to see stronger orange selling as well as green selling here. Form a structure with 5-day as a resistance and to grab this liquidity on the way down to retest the 20-day moving average eventually. So you pay very close attention to that. However, the market can be building liquidity here, isn't it? Maybe it will take some time, right? 5-day you still have to watch out. 5-day can still turn into some form of very strong support. So just pay close attention to that. The market can grind a little further before it starts to retest and re-enter the blue liquidity as well, because they want to build more liquidity. They want to trap more buyers before they start pulling back and giving time for the 20-day moving average to come closer to the range and give it time for the 5-day to remain in this blue zone for it to build more liquidity. So this is what I mean by algorithm, level by level. You do not rush this, right? It's a live auction. That means at every point in time, they can place new orders. So why are you predicting? You cannot be predicting. So you have to learn to tell. Now, this is how you learn to tell. You know the tactics that the market can deploy. You know the playbook. You know how to be looking out for liquidity. So in a way, it's like football. You know how the ball travels, right? There's a certain law involved, and that law is physics. So in the market, in the stock market, the law is demand, supply, and orders. And when you can understand that, you understand the concept of liquidity, you understand the strength of the buying and selling with the algorithms, and from there you can be able to understand liquidity, you can be able to understand orders, and you can be, most importantly, able to understand, in a way, the laws of physics in the stock market. And you can prepare accordingly. So this is how you be preparing. It's a skill. You have to learn it. So you do not be predicting. This is not a crystal ball, right? If you're looking at this like a crystal ball, you are obviously looking at trading in the wrong way, and you are the reason why there's liquidity for you and I, for our members to be taking advantage of, right? So now that you're watching this, learn it. Stop becoming liquidity, right? So understand this, very important. Yes, these are the very key indicators here. Now, for a better move, right, that will be for the market to build more liquidity here. Now, obviously, I want something like that if it's a small, more upside here for at least the 20-day moving average retest. 20-day will continue trending up. That's what's going to happen. Right, so you want to see more liquidity building before it starts pushing up once again. If it wants to continue heading up, a 20-day retest, and then continuing up the 5-day and the upper Bollinger right there. So you can see past examples of how it happens, right? It's there for you. Most importantly, don't be shorting this before any confirmation, right? You have to learn to do that. Now, the people who are shorting this, they are having someone pay it for them, right? So this is how the advanced people do it. It's not that advanced. It's quite a simple way to do it. And that is they are selling calls to fund their puts. So you understand how that works, because when you sell your calls, you can continue to manage your risks because time becomes your ally, because you are owning the underlying stock. So you understand that because you are covered, you have time as your ally, and therefore you can continually be selling while taking the income from selling your calls to fund your puts. So someone is paying for your short position. You understand that? You are not over leveraged because someone is paying for your short position. The earlier you understand that, the better you will become as a trader. So please understand that someone is paying for your over leveraged position. And when you're shorting something, you will certainly be over leveraged, because shorting by essence of itself is taking a leverage position. You are borrowing somebody's stock and paying it back later. You understand the logic of shorting. So these are basic principles of trading. You have to first figure that out before you want to come to more advanced concepts like this. Now, if you're trading 0-day to expiry options, if you're taking very high leverage positions in trading options in general, you have to understand this is advanced. This requires precision. So if you do not understand the basics, then you have to focus on building that. And this is why I'm going to run a course soon, not just the basics, but also the advanced in the Discord server as well. We've been running several weekly courses as well, weekly training videos. So Discord members, please do review them, right? There are courses, lots of tidbits and very good anecdotes within each training videos for you to enhance your trading knowledge. And most importantly is show up every day, trade with me every day, watch and review the videos and your trades every day. That's the best way to learn, right? So watch out for the entire week. Let's see where the liquidity goes now that we also have the conditions that are approaching, right? And you see the very key liquidity levels here, right? You want to see 20-day coming close to that 700 level. That's when we can close the inverse cup where the liquidity is before it starts building more liquidity if it wants to reject the 20-day moving average. So you see there are very key support levels in the 20-day, in the 200-day, and most importantly, your bottom Bollinger is quickly approaching your 200-day moving average as well. Remember back then when we had that Liberation Day dump right here, I told you don't worry, because once the bottom Bollinger crosses above the 200-day moving average, and you see it here, you're not too late to go long. Obviously, there are also indicators like the 20-day and the 5-day you have to pay close attention to. But true enough, take a look. If you were to buy then, see bottom Bollinger crossing above your 200-day moving average, if you were to buy then, you would still be able to catch. It was 580 when we got there, right? And now we are at 720. You could have still caught 140 points. And SPY, that's 1,400 points on the S&P 500 SPX or even on the ES. Incredible. So don't worry about that, right? There are indicators that you can continue to wait for and just be patient about, right? And you see we are coming to some sort of convergence in most of the trend indicators. So this is where you start paying attention. All right. So most importantly, watch that market cycle videos, right? Understand day by day. That's how you improve, right? When we train together, when we trade together, this is the best way to improve, right? If you're depending on one video, especially a 10-minute video, to make yourself a better trader, you must be dreaming. You must be dreaming. You have to put in the work. And I'm putting in the work every single day, producing videos for you, trading together with you, right? Like it or not, you may think I'm not working hard, and that's your opinion. But I'm the one putting in the work every single day. So your opinion doesn't matter to me. I show up every day. You show up every day. You get better, right? That's our relationship. I want you to get better. You better get better, right? It's up to you. It's up to you. Your decision. I will make my move and you decide if you want to make a move. So if you want to get better at trading, you have to come every day, show up, and please do in the work. Watch the videos, understand the videos, and review 5 years worth of resources at the Discord server. Right, 5 years worth. Every single day. Almost every single day. I provide analysis. Right, and they can be traced back. It's all time stamped. It's not on hindsight. It's all time-stamped. You can take a look. You can review it. You can compare it to the videos, right? And try to make sense of it for yourself, right? So you be the judge. And most of the time, the people who don't do the work, they want to find someone else to blame. And I'm the easy target. But it's fine, because at the end of the day, you're lying to yourself and you're the one that's wasting money. So please, stop lying to yourself. Be honest with yourself. That's the first step. And then once you can overcome the barrier of your laziness, this is when you start putting in the work. And that's when you will see real progress, right? So thank you very much for watching. I will see you closer to opening bell.